It's time for the morning trade. Accenture reports its earnings before the bell on Friday morning. So when you get up, we were off tomorrow, Juneteenth. Friday back on, and we have this big name. JD Durkin, Schwab Network contributor, is with us, and we're watching the shares of Accenture today. They've been under pressure in general. Let's talk a little bit about the company. What are you watching for?
Yeah, they have been under pressure quite a bit here, Nicole. Year to date, down about 11%. And today in the session, they're already off their kind of session lows, but we are seeing shares down about 0.3%. But the street is expecting revenues projected to rise 4.5% year over year to about $17.2 billion. Again, as you said, Nicole, we'll get these numbers crossing the wire on Friday morning after the holiday. Earnings per share expected to move up. This would be about 5% of a gain from where we were a year ago to $3.50. Four unique tranches of revenue in terms of segment growth for the company Industry X, strategy and consulting, operations, but really the big money maker for Accenture, technology. Almost 60% of all the revenue the company takes in comes from things like building software, cloud migration, AI, and automation services as well. And analysts are also expecting to see revenue boosts in all of the different geographical markets, right? So it's not just the Americas, where analysts are expecting there to be about a 5% increase from the year ago quarter. They're also expecting pretty comparable increases for the Asia Pacific region. That would be about a 1.5% to 2% boost from the year ago quarter, according to analysts on the street. And Europe, Middle East, and Africa expected to come in at about $6 billion. That would be a 4.5% increase from the year ago quarter. What's really interesting to me here, Nicole, you look back at March 20th when the company reported its second quarter earnings. Even though you had a solid beat on the top line, a solid beat on the bottom line, it was really the theme of the year for Accenture and a lot of other comparable companies. Stop me if you've heard the word uncertainty used this word used a lot this year. We heard that from Julie Sweet, the CEO, because the federal government is such an important client of a company like Accenture. Julie Sweet was very quick to come out there and say at the time, because of the Elon Musk-led efforts over Doge, federal government cuts, federal government kind of decreasing their overall spend, that was expected to be a really kind of a significant headwind for the company, and we saw shares gap down about 8%. I think the Doge conversation has somewhat settled, a bit more normalized here, so we'll certainly hear what Julie Sweet and the rest of the company have to say first thing Friday morning.
So when we look about the bookings environment, Morgan Stanley saying it's somewhat lackluster. They did note that by the way, they have a 340 target. It's at 311. Morgan Stanley did note that Accenture may lift the lower end of the full year growth outlook on long-term deals. That might be at least one good point if they can sort of lift the lower end and narrow it. That brings us closer to the higher end. That would be some good news ultimately.
Yeah, but it does come a few months after Morgan Stanley already cut their price target, and they were in the same category of Jefferies, again citing a lot of that backdrop of macroeconomic uncertainty and the uncertainty with regards to the Trump administration's overall spending goals. Jefferies saying Accenture's clients have become a bit more cautious in the past month, that month being the February to March timeframe. But since then, we've had a lot of analysts on the street maintain their ratings. So JP Morgan, Piper Sandler, and Barclays all still maintaining their ratings of overweight. Morgan Stanley maintaining, sticking with equal weight. UBS a buy, RBC Capital going from outperform to outperform, also maintaining where they've had it for a while.
Yeah, and we're seeing 340, 350. Jefferies, you mentioned the Jefferies and how folks have turned more cautious, and that one is on the lower end. That target is at 315. All right, JD Durkin, a good look there at Accenture, and that comes out Friday morning, folks, so get ready for that name. Over 1 year, it's still holding a gain of about 8.5%, but after that, lots of red. Scott Bauer, CEO of Prosper Trading Academy, is now with us, and we'll look at an example trade for this name.
Hi, Nicole. Good morning. And I really like ACN here, and both from a technical and a fundamental side. From the technical side, this area right here, 310 to 315, that has been some really big support. We have seen the stock dip down a couple times, on big market sell-offs down to the 290 area. But this area is a big consolidation area, and ACN has, over the last 6 weeks or so, really consolidated here. So what we have seen recently from some analysts are actually some upgrades over the last several weeks or so, raising targets, as you guys just talked about. So I like the upside here. And what I'm going to do is what's called a diagonal call spread. So I'm selling this week's 345 calls. That's about $33 up higher. But I'm going to buy next week's 340 call. So what I'm basically doing, if you want to look at it, is I'm buying the 340 call for next week and just subsidizing it or getting some credit back by selling this week's call. I'm trying to do that for about $1 or so, which I think is a really, really good price. I'm not sure if we'll get filled there or not, but that would be my maximum risk. So even if ACN goes down or just doesn't move high enough, dollar is my max risk on this.
Understood. Thank you for that, Scott. Appreciate it. So we'll watch for all of that. In the meantime, what's your big picture? President Trump is out speaking this morning. He even said, while Iran has now shown interest in talking, next week, he said, is going to be a big week or maybe sooner. It certainly doesn't look like the USA is rushing to help Israel to make some big moves. On the contrary, it looks like the president continues to be in the Situation Room in a bit of a wait and see mode, but said next week is going to be a big week. And a part of this really is contingent upon what Iran does or doesn't do. And so what do you think?
I mean, I don't know what to think geopolitically. I'm not in the Situation Room. I would think that at the end of the day, whether it's this week, next week, I would think the U.S. probably would get involved. I'm not sure how the markets would react to that, but right now, in being on the floor and talking to traders and looking at the trade out there's not a big sense of urgency for either the retail side or even on the institutional side, people picking up downside puts or upside calls into VIX. There's definitely some summer trade and complacency out there. Obviously, that can change in a heartbeat, but I'm not sure that the market really expects any big changes. But I would think personally that we would get involved probably sooner rather than later.
Right, understood. All right, are you feeling like we could hit new highs on the market this year? Is that still the
absolutely.
picture?
Absolutely. I mean, listen, there's so many overhangs and there's so many headwinds, obviously the Middle East, rates, tariffs. So there's a lot of unknowns here, but it certainly seems like there's a lot of money still on the sidelines that want to see this market move higher. And I think we will, barring any big event, that sets some concern back into the marketplace.
All right. Well, it's good to see you, Scott Bauer, CEO of Prosper Trading Academy.